into our afternoon and then into the rest of this week. We're looking at the dollar, and DXY completed this massive profit target that we had been inside of at the beginning of May. And this long target is significant in that it has previously traded. And we did end up running into this very first pullback as we were coming out of the middle of February. And it's important to remember, what happened at the middle of February when the dollar strengthened from these levels. Let's go back and look at that. When you go back out to the daily chart, these are green lines or contract change events here. We'll turn those off for a moment. But when we were coming into the beginning of the year, we had run into this previous high up here. And the new high that we had made was on January 28th. And then we were chopping straight sideways. But as we were coming out of the 11th, you can see here we're going straight sideways at our previous highs. This is the 11th. When the dollar ripped away from its support level, the indices fell all the way into the end of March. By the way, the end of March was a profit target to a traditional short that we had been inside of as part of that series. The reason I want to point that out is because the inverse is also true when the dollar weakens. And so here is the run up into new highs of the year, and we had completed profit targets. We were at this previous high, watching for a pullback, and we made a double top as we went into March 31st. This previous high, when we ran into it, created a massive dollar pullback into this support level. Now, I want to, again, go back here and look at what happened when we failed to break out of this previous high and the dollar started its pullback into support. The dollar was weakening. What was happening to the indices? The indices were screaming at the same time out of this profit target. And then we broke through the series of short setups and we essentially went 1,500 points straight up. And that is the rally that you see, the dollar weakness trade. Now, the dollar did start strengthening again as we came out of the middle of May. And as you can see here, the dollar strengthened. And we actually, for a brief moment, went into a positive correlation. So the indices and the dollar were going up together. The indices and the dollar were going up together. Just recently, over this last 30 days, the NASDAQ and the ES went into a negative correlation, whereas the Dow and the Russell are still in a positive correlation. You can see the study here. The 30-day period, there's a negative correlation for the S&P and the NASDAQ. They've had trouble getting going, right? The rotation has been into the Dow and the Russell. There's a positive correlation there. But note that negative correlation exists on the NASDAQ and the S&P still. So what happens if the dollar sells off from this profit target again? What would happen? Would something similar happen to what happened on April 1st? Just go straight up 1,500 points? Can anyone rule that out? Can't, can we? We can't rule that out. So we have been in this environment here where the dollar strength trade completed its targets. And we have actually been witnessing this week. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.